This scalping strategy is boring, but it makes me over $2,000 every single day. And in this video, I will break it down for you in just 3 simple steps. So with that being said, let's get into the video. All right, as you can see, I'm currently in the markets, and what we have to now understand is what is the lifeblood of the market? How do these markets move? Well, it's simple. The market moves always in trend. There's the uptrend, downtrend, and consolidation. Skip consolidation is sideways movement when there's equal amount of buyers and sellers, but what we have to be focusing on is uptrend and downtrend. When the price moves in uptrend, it moves in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? We have to be looking for buys in here because it's a continuous cycle and we have to follow the trend naturally like this, okay? So this is the step number 1, the trends, right? And the downtrend, same stuff but to the downside. Low lows, low highs, low lows, low highs, low lows, low highs, low lows, right? And in this case, we obviously have to look for shorts. Now, the way you actually spot these trends is simple. There's the big move and a small move in the trend. Big move is called an impulse and the small move is called a retracement. Impulse, retracement, impulse, retracement. Same as here. Impulse, retracement, impulse, retracement, impulse, retracement, impulse. Now, the reason why we have to understand that is because when there's an impulse followed by retracement, that's when a high appears right here above here, because a high is being created by an up candle followed by a down candle. Now, why is it important? Because when we understand that where's the high, we can seek for the break of structure, which is an up candle body closing above the most recent high. So that's a BOS, break of structure. Now, again, why is it important? Because we could potentially enter right here and follow the market to the upside like this. Simple, I know. Now in the downtrend, we have to see the same stuff but to the downside, of course. Okay, there's that impulse retracement. That's when a low appears because a down candle followed by an up candle. Low appears, and when the down candle body after that closes below the most recent low, that's a break of structure to the downside, and we have to be looking for sales right here. Okay, very simple, effective, and it works efficiently every single day. Now, how do we actually follow the trend? Let me show you in the charts. Essentially, this is a downtrend. As you can see, how do we spot that this is a downtrend? Impulse, retracement, aka low lows, low highs, low lows, low highs, low lows, low highs, low lows. This constant movement to the downside in a cycle, in a trend cycle. Now, how do we actually follow this trend? Very simple. It's actually when there's a down candle followed by an up candle, that's when a low appears. Impulse, retracement. As you can see, impulse, retracement. Right here, this is when the low appears. And as you can see, right here, when that happens, we have to see the body of the down candle, the next down candle close below the most recent low. That's when a break of structure happens, BOS. And we can enter right here on the money. Now, only if this is a nice downtrend to the downside, right? Of course, we have to just follow the trend. And if I get like a 1 to 2 risk to reward ratio, I could be entering right here and make a ton of money. And this is what I do every single day with my students, with me, and literally last time that I traded with this strategy, I made 2K, okay? Very simple and effective. Now, let me show you to the upside in this case, because obviously we have to be looking for buys and we have to be looking for sell sometimes. So this is an uptrend. How do we spot that? Literally, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs, higher lows, and higher highs. It's this constant movement to the upside. Now, as you see, it's not always as beautiful as it should be, but this is also good practice because sometimes the trend can be a little bit difficult to find, but actually very easy. Just look at this. This is how we spot the trend. Now, how do we actually follow the trend? Now, let's say if I go right here, we have to spot the most recent high to see the break of structure. So what is this? Up candle followed by down candle, impulse, retracement, that's a high. Let's see, does the up candle body close above that to see the break of structure? It doesn't. Look at this. Why isn't this a break of structure to the upside? Because it literally, the body of the candle, the fat part of the candle doesn't close above the most recent high, and we actually create a new high because this is an up candle followed by a down candle. Now, you may wonder, why am I placing the high above this down candle? Well, it's for the simple fact that a high is being created by 2 candles, and you have to choose the most prominent high, the most prominent wick. Now we break structure, literally, because this body of the up candle, the next up candle closes above the most recent high right here, and I can enter right here, put the stop loss below the most recent down candle, and let's take like a 1 to 2 risk reward ratio following the trend. And there we go. And as you see, quite perfectly, we get this 1 to 2 risk reward ratio, and that's how I follow the trend. Now, that is purely by following the trend. But we have to also understand what causes these trends to switch the direction, because these trends, as you can see, they do not continue forever. Now, for that, we have to move on to step number 2, which is market liquidity. Liquidity is essentially this lifeblood of the market as well for the big banks, because big banks, institutions, the hedge funds, the ones who actually move the market, they want to take out liquidity. Liquidity is essentially the actual main reason these markets move, because banks have to take out liquidity, they have to take liquidity and then switch the market trend direction to take more liquidity below or above. So in this case, they took some liquidity above here, and they want to push the price to the downside to take some sell side liquidity. That may sound very complex, but it's very easy, because these liquidities can be found super easily. How do we spot these liquidities? Well, above every high and below every low, there will be resting liquidity in the higher time frame. As you can see, this is just a 1 minute time frame, so I can just follow the trend. But if we go to the 50-minute and up time frames, we can see the highs and lows. There will be a lot of liquidity resting, and we can seek those to make a lot of money. How do we actually spot those highs and lows? A high is being created by an up candle followed by a down candle. As you can see, this is our high, aka liquidity, because it's up candle followed by a down candle in the higher time frames. If we're moving to the upside like this, trend, higher highs, higher lows, higher highs, we have to be looking for buys, but be ready to take this liquidity, because then the trend can switch its direction. So if you go right here, take the liquidity. If after this we see a market structure shift, which I'm going to explain later in this video, then we can sell the markets. But we have to wait and see, because after this liquidity gets swept, the price can literally switch the trend as it did in here. But essentially, I'm going to show you a low first, and then I'm going to show you how can you actually spot these market structure shifts to make a lot of money, to see a reversal. And that's how I literally find these sniper entries to make a lot of money. But essentially, down candle followed by an up candle is a low. So right here will be a lot of resting liquidity. And how can we use this? Well, if we go to the downside in the trend, like this low lows, low highs, low lows, and we sweep the liquidity, we have to see the market structure shift to look for buys. And how do we actually spot those market structure shifts? Well, from upside to the downside, from an uptrend to a downtrend with liquidity, the market structure shift is found like this. Okay, so high highs, high lows, high highs. When there's a sweep of liquidity, you're gonna go to the 1 minute time frame. What you have to see is two breakout structures to the downside like this. So if this is literally a low right here, we're gonna mark this low right here, because this is a high low, right? When a down candle body closes below the low, that's a breakout structure to the downside, like this. So if this is a 1 minute time frame in the trend, and this is a 50-minute liquidity, we have to see two breakout structures to see that downtrend movement, like low lows, low highs, low lows. That's two breakout structures, like this. And right here, I would sell the markets to the downside. Easy as it is. And here you're gonna see the market structure shift. The price is gonna continue down as we saw in here. Okay? And from a downtrend to an uptrend with sell side liquidity. By the way, a low in the higher time frame is sell side liquidity. When a downtrend moves in low lows, low highs, low lows, low highs, low lows, sweep of liquidity, we have to see the market structure shift. How? A breakout structure to the upside like this. This is a most recent low high like this. High, BOS. Looks very complex, but guys, it's very easy. I promise you, if you try this, you will see good results. This is now a higher high, higher low, higher high. So two breakout structures. Okay, and you're gonna buy from here, because this is a market structure shift after liquidity. Now keep this in mind, the liquidity has to be 50-minute and up, 50-minute time frame and up liquidity, lows and highs. Okay, and you're gonna buy right here. But essentially, that's how you see the market structure shift. Now, normally, if you do not see the liquidity, if you do not see any liquidity available, you're gonna just follow the current trend. So if this is currently moving to the upside like this, and it continues to go up, and there's no liquidity, you're gonna continue to look for buys. But let me show you now how can you see that market structure shift with liquidity, since I already showed you how to follow the trend example characteristic. So literally, I'm currently in the 15-minute time frame. This is a high. Why is this a high? Because this is an up candle followed by down candle, so there's resting liquidity, but not anymore because it got swept. The banks, institutions, and hedge funds, they got what they needed, liquidity to be taken. That's how they can fill their large positions. So here's liquidity, and right here is a sweep of liquidity. And after this, what I do to confirm the trend market structure shift from a 15-minute time frame to 1 minute time frame, I'm gonna go to the 1 minute time frame now to see the two breakout structures to the downside. We swept the liquidity right here. We now got one breakout structure to the downside, because this is literally a down candle followed by an up candle, a body of the down candle close below the most recent low. Look at this. Remember the impulse. Remember this? Impulse, retracement, impulse. Breakout structure number one, we have to see the breaker structure number 2. Now we have to see this down candle body close below the most recent low to confirm the breaker structure number 2. So let's go. Let's see, do we see that? Now as you can see, we create a new low right here. This was the low number 1, low number 2, but we actually then create a new low right here. Remember, when you're following the trend, the most recent high and low counts when you want to see that breaker structure. So as you can see, now we broke structure right here. POS number 2, like this, follow the trend, and I'm gonna target some lows. I'm gonna target this low right here because there's liquidity as well. And let's see what happens. Boom. What about a downtrend to an uptrend from sell side liquidity? Let me show you. Look at this. This is a 15-minute down candle followed by an up candle sequence. This is quite frankly a low in the 15-minute time frame. So what is that? There's a lot of liquidity below resting here. Now why is it important? Because in the 1 minute time frame it is going down, right? Like this. As you can see, it is in a downtrend in the 1 minute time frame. But look at this. It got swept. Now it got swept, and now we have to see the 2 breaker structures to the upside to confirm the market structure shift. This is a high number 1, breaker structure number 1. This is a up candle followed by down candle. So essentially, low lows, low highs, low lows, breaker structure number 1. We create a new high. Why? Because we create an up candle followed by down candle. This is in the 1 minute time frame, by the way, after the sweep of liquidity. And we have to see that breaker structure. We break structure the second time, but below here. So this is the most recent high that we had. So we can remove that one. And this is our breaker structure number 2. Breaker structure number 2 after the sweep of liquidity from sell side. So what I would do now is buy right here, put the stop loss below the most recent down candle after the breaker structure. And I'm gonna follow the trend by targeting these highs because they have liquidity. And let's see what happens. Guys, I'm telling you, this is how I make money, okay? This is easy, it's very easy. This is, I promise you, if you try this, you're gonna see massive results. Now, what if the liquidity doesn't have any power? What if the liquidity gets ignored? Like here, if we just continue up, we're gonna follow the trend regardless. That means, like, if the liquidity doesn't react anyway, the market doesn't react anyway from the liquidity, then that means the liquidity didn't have enough power. The big banks want to take more liquidity above, okay, if that makes sense. But essentially, if it gives us the market structure shift to the downside after this, which it didn't, but if it would have, I would have shorted the markets. 2 breaker structures to the downside, that's when I would have shorted the markets. When following the trend, you just have to follow the trend easily. Breaker structures to the upside, breaker structures to the downside, right? But when you want to see that market structure shift, you have to see the 2 breaker structures after sweep of liquidity. It's very simple, effective, happens every single day. But if you still have a lot of questions, you should watch the first link in the description. It is my free course. And also comment down below, like, subscribe, and if you want the freedom like I do, like I have, then join the free Telegram from the link in the description as well. Alright, as usual, I will see you on the other side. Peace out.